Hi guys, welcome to Investify, where we help you grow your wealth through smart investments. Get ready to ride the investment wave of 2023. Today, we're diving into Warren Buffett's insights on the biggest buy opportunity of 2023. Discover why these two dirt cheap stocks could be your ticket to investment success. Let's get started. Warren Buffett explains the biggest buy the dip opportunity of 2023. Firstly, Realty Income Corporation. Recognized for its unwavering monthly dividends spanning nearly 3 decades, offers an enticing 6% yield. Currently at its lowest valuation since 2011, it presents an appealing buy low opportunity. Secondly, Main Street Capital or Main. A resilient development company boasts an impressive 7% yield and a consistent record of dividend growth. With a remarkable 114% increase in dividend per share since Q4 of 2007, it's a compelling choice handpicked by Warren Buffett to elevate your investment portfolio. Warren Buffett and Charlie Munger have consistently emphasized the importance of choosing businesses over stocks. Their philosophy revolves around picking companies, not merely trading stock tickers. Unlike those who fixate on stock charts and market trends, Buffett and Munger focus on the intrinsic value and long-term potential of businesses. They see investments as ownership in companies, not as speculative trades. The rational approach stands in stark contrast to the emotional reactions often triggered by market fluctuations. Investors are swayed by the bandwagon effect, buying stocks that are rising and selling those in decline. This impulsive behavior can lead to missed opportunities and potential losses. Instead, Buffett and Munger advocate a methodical approach. They deeply analyze a company's fundamentals, competitive advantages, growth potential, and overall health. If their research indicates that a company is undervalued compared to its intrinsic value, they consider it an opportunity worth investing in, regardless of the stock's current direction. With this investment philosophy in mind, let's explore 2 promising businesses that have the potential for significant growth in the coming years. Number 1, Realty Income Corporation stands out as a remarkable investment opportunity within Warren Buffett's list of the biggest buy the dip opportunities of 2023. This prominent real estate investment trust has carved a niche for itself with its unwavering commitment to deliver consistent monthly dividend payments. What truly distinguishes Realty Income is its remarkable record of never missing a single monthly dividend payment over the past 3 decades, even during turbulent economic downturns and market crashes. Investors have come to rely on Realty Income as a dependable source of income, regardless of external market volatility. At present, Realty Income offers an enticing 6% dividend yield, and the outlook suggests the potential for this yield to continue growing over time. This steady income stream is underpinned by Realty Income's operational model, which revolves around owning individual properties that are leased through long-term contracts, often extending well beyond a decade. This stability in income generation has earned Realty Income a well-deserved reputation as one of the most prudently managed REITs in the real estate industry. Despite recent fluctuations in its market price, several key financial metrics paint a picture of potential undervaluation. Metrics such as price to sales, EV to EBITDA, and price to FFO ratios indicate that Realty Income's current market valuation might not fully reflect its intrinsic worth. One compelling reason to consider Realty Income for your investment portfolio is its sustainable dividend yield. As inflation and interest rates continue their upward trajectory, investors are increasingly drawn to the stock's attractive yield, which has become all the more appealing. If the broader economic environment remains favorable, there is a distinct possibility that Realty Income's value could surpass recent peaks, translating into substantial returns for savvy investors. This potential for growth, coupled with its proven track record of reliability, makes Realty Income a compelling addition to your investment strategy in 2023. Before we continue, remember to show your support by giving this video a big thumbs up, subscribing to our channel, and hitting the notification bell to stay updated with our latest content. Number 2. Main Street Capital is a business development company or BDC that focuses on investments in lower middle market firms. It combines debt and equity strategies, targeting companies with revenues ranging from $10 million to $150 million. What sets Main Street Capital apart is its impressive 7% yield backed by a substantial payout ratio. Main Street Capital's dividend has remained resilient, even during economic challenges like the Great Recession and the COVID-19 crisis. It has consistently grown its dividend rate per share, demonstrating its commitment to rewarding shareholders. As of June 30, 2023, the company manages assets worth $6.7 billion, offering diversified investments across various sectors. Main Street Capital's robust financial structure positions it well in the face of rising interest rates. With a significant portion of fixed-rate debt and favorable credit ratings, it has the potential for strong growth in the coming years. Its consistent dividend growth, sustainable payout ratio, and undervaluation make it an attractive choice for income-focused investors. In conclusion, Warren Buffett and Charlie Munger's businesses over stocks approach offers invaluable wisdom for investors. This strategy, rooted in assessing a company's intrinsic value and long-term potential, provides a reliable compass for making sound investment choices. Realty Income and Main Street Capital, with their consistent dividends, impressive yields, and resilience, exemplify the type of investments aligning with this philosophy. By following the sage advice, investors can navigate the complexities of the market, ultimately aiming for significant returns on their investment. Remember, in the dynamic world of investments, adopting a long-term perspective and evaluating businesses rather than fixating on stock trends can lead to more robust and rewarding portfolio. We've delved into the promising investment potential of Realty Income Corporation and Main Street Capital, two stocks that align with a business over stocks philosophy advocated by Warren Buffett and Charlie Munger. Now, we'd love to hear your thoughts and insights on this. What are your thoughts on the investment strategies we've discussed today? Do you have any questions or insights you'd like to share? Have you considered investing in Realty Income Corporation or Main Street Capital? Or do you have other investment ideas you'd like to discuss? Feel free to share your opinions in the comment section below. Your feedback is valuable to us and help us create content that's relevant to your investment interests. So please take a moment to share your insights. Well, that's it for today. Thank you for watching. Don't forget to like this video, subscribe to our channel, and ring that notification bell for more updates here on Investify.